this is Raman Gill. Welcome to episode 14 of the 10,000 Trade Show. This show is all about mastering trading and creating excellence through deliberate practice and analysis of 10,000 trade setups. In this episode, we will take a look at another pivot point trade. Pivot points are one of my favorite trade setups. They are easy to identify and pay quite well. In this episode, we will take a look at how do we enter the trade, where to put our stop loss, and where to exit the trade with profit. So let's go on to the charts now.
Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. We're looking at a pound US dollar 5-minute chart here. So the first thing that we need to identify for this type of trade setup, it's good to know where your support and resistance areas are. Next thing we need to look for is the pivot point. So here the green line that we have here is the daily pivot point. And as you can see, the next step here is a trade setup. So we're looking for a rejection pattern going into the pivot point. So price was pushing up here, and then it goes and gives us a railroad track here, and here an engulfing candle. So this setup here that we see is a reversal trade. It's a reversal pattern. It's a double top. So basically price went and tested the level and got rejected from there multiple times. Once you see this engulfing candle close, you see the double top in place, we can enter the trade at this level. So this will be our entry, and the stop loss would go above this level. Make sure your stop loss is a few pips above the pin here or above your double top, because we do want to give our trade some room to breathe in case it goes and tests this level again. We don't want to get taken out on the spread. So make sure you have a few pips, the stop loss is a few pips above this level, above the high, so that the trade has breathing room. So we entered our trade here on the close of this candle. So the first target we'd be looking for would be our S1 level, which is this blue line here. Once over here, you can either take partial profit, so this will be your first take profit level, or if you want the trade to continue, or if you want to stay in the trade and see if you'll get to the next level, you can hold on to your trade. So you can take partial profits at S1, which is this blue line, and then wait for your second target, which will be S2. This blue line here is S2, and as we can see, the price holds this S1 level for a long time, finally breaks through this S1 level, does a back test of it, and goes to S2. So this is where the price starts going sideways and you can exit your trade. If you happen to exit your trade after this, if you were not interested in holding your trade, you could re-enter this trade here. Once the price closes with a solid engulfing candle below the below the pivot point here, once the price closes below your S1, your next target would be S2. So you can split this trade into two trades. Your first entry would be here with your take profit at S1, and then you can re-enter the trade once the price closes below S2 here and does a back test of this level. So you could re-enter the trade here looking for S2 level. So once the price starts showing signs of exhaustion, you can just exit your trade, and as a result, you have from entry here to exit, we would have a profit of about 91 pips, or about $900 in profit on one standard lot.
Hope you enjoyed that trade setup. If you like this video, please share it with your friends. Also, don't forget to subscribe to the show so you can get the latest episodes. Thank you so much for joining me again on this show, and stay tuned for another great trade setup tomorrow.